Ottawa's July housing numbers are out, and they reveal a market that's balanced, steady, and giving us some important clues about what's really ahead. In this video, I'll walk you through the key numbers and explain what they actually mean for buyers and sellers, and share my predictions for what to expect in the fall market ahead. So whether you're looking to buy, sell, or just stay informed, you'll leave knowing exactly where the Ottawa market stands and where it's heading. Let's start with the numbers. In July, there were a total of 1,318 homes that were sold across the Ottawa Real Estate Board. This is down from 1,602 units in June, representing a 4.9 increase over July prior. So July of 2024, we're seeing almost a 5% increase. The average sale price for all sold listings in July was $695,209. This is up 2.2% from last year. Taking a closer look at months of inventory, we're sitting at 3.2 months of inventory. So this is typically understood as an indicator considering a balanced market. This tells us that there's buyer demand is slightly stronger in 2024, even though there's higher borrowing costs still in play. You'll see the average sale price for sold listings in July was $695,209. This is up 2.2% from this time last year. The year-to-date average sits at $702,840. This is up 3% compared to 2024. So we're seeing a lot of increases, which is really a positive sign as we lead into August. In terms of dollars, July sales volume was at about $920 million, which is a 7.2% increase from a year ago, a healthy signal for the market activity ahead. On the supply side, we sit at 2,549 new listings that were added in July. This is up 11.7% more than the year before. Active listings climbed 4,205, up 14% from July of 2024. Months of inventory, which is how long it would take to sell everything on the market if no new homes came on for sale. This rose to 3.2%, up from 2.9 this time last year, and 2.7 months of inventory last month. So we're entering into a more balanced market where there's an equal amount of buyers as there is sellers coming on the market. Anytime between 3 to 4 months is considered a balanced market. So in Ottawa, it's right in that sweet spot at 3.2% for the July data. Benchmark prices gives us another layer of detail that I want to highlight for you. Single family homes at $704,000, which is up 2%. You'll see the big one right here. Townhomes saw the largest increase, up 8.3% to an average price of $468,000. Condos is where we're seeing the dip. So condos have dipped by 1.6%, coming in at an average price for a condo in Ottawa at $411,900. Right away, you can see the different segments are telling different stories. And that's where the market meaning and the prediction gets interesting. So buckle up. So what does this mean today? Ottawa is sitting in a balanced market. Buyers have more choice, but sellers are still getting fair prices. The balance is important. It means we're not in a frenzy bidding war that we saw in the COVID days in that 2020 to 2021 period of time, but we're also not in the deep price cuts you might hear about in other parts of Ontario. Big part of this stability comes from Ottawa's unique buyer pool, a large public sector workplace with steady incomes, plus consistent immigration from other provinces. As you may recall, when we started to look at the different percentages, the largest increase was the townhouse surge. Townhouses are the star of the show right now. Benchmark prices are up 8.3%, which is the strongest growth among all property types. Why is this? Well, it comes down to affordability. Townhomes offer middle ground, more space than a condo, and more budget-friendly than a detached home. This segment is attracting both first-time buyers and downsizers who want less maintenance without sacrificing comfort. My prediction: townhomes will remain in high demand into the fall, especially in the neighborhoods with good transit, schools, and amenities. If you're a seller in this category, you're in a strong position. But as inventory rises, overpricing can still hurt you. The condo cooling. Condos are a different story. Benchmark prices are down 1.6% and sales are softer. Several factors could be at play. Increased supply in certain downtown towers, higher condo fees, and a shift in buyer priorities towards more space. Heading into the fall, the condo market might face more downward price pressure if demand does not pick up, especially in investor-heavy buildings. The flip side though, for buyers who've been priced out of the market before, condos might be the best entry point for you at this time of year. Single-family detached stability. Detached homes remain steady. Benchmark prices up a modest 2%, average sale prices slightly more. With inventory up, but still at healthy levels, I don't expect big price swings in this segment. The most desirable neighborhoods will still see strong competition, especially for move-in ready homes, but the overall pace will be calmer than the peak in the spring market. Investors and buyer psychology going into the fall. Inventory is the key number to watch. At 4,205 active listings, buyers now have more leverage, especially in segments with plenty of choice. The psychology shift is important. When buyers know they can take a breath and view multiple options, the urgency fades. The sellers have to focus more and more on pricing and presenting the absolute best. If inventory continues to climb in October, sellers might need to adjust expectations to secure a deal before the holiday slowdown. Holiday slowdown begins sort of like the first week of December, so sort of like December 5th until January 5th. Just fun fact for you. External factors to watch beyond the local market. Two big things that will influence Ottawa's real estate market. Number one, interest rates. If the Bank of Canada signals cuts, we could see a mini surge of buyers jumping in before the prices react. The second would be economic stability. Ottawa's public sector base usually shields us from major volatility, but broader economic uncertainty could still temper demand. So what does this mean for you? Well, if you're a buyer right now listening in, you're in a better position than this time last year. More inventory, less competition, and stable prices. Fall could be a great time to buy before rate changes spark more demand. If you're a seller, it's still a good market, but strategy matters more than ever. Pricing right and investing in proper presentation will help you stand out amongst the competition. Overpricing in a balanced market is a fast track to sitting on the shelf and not selling. So to sum it all up, Ottawa's market is balanced, stable, and heading into the fall season with opportunities for both buyers and sellers. Townhomes are leading the way. Condos need some love, and detached homes are steady as she goes. The wild card will be inventory trends and interest rates. Those two will decide how the fall market shapes up.